Question 1. Legal and regulatory framework. Under New Jersey's Consumer Fraud Act, which of the following scenarios would most likely result in a violation related to cyber insurance practices? A. A cyber insurer failing to disclose a policy's exclusions in marketing materials, but including them in the final policy document. B. A cyber insurer denying coverage for a claim explicitly excluded in the policy terms. C. A cyber insurer marketing its product as offering complete coverage while omitting that regulatory fines are excluded. D. A cyber insurer refusing to renew a policy due to poor loss experience without providing a reason to the insured. Answer. C. Explanation. Option A. Not correct. While transparency is vital, failing to disclose exclusions in marketing materials may not constitute a violation if exclusions are explicitly stated in the policy. Option B. Not correct. Denying a claim based on explicit exclusions is lawful and aligns with the contract terms. Option C. Correct. Misrepresenting coverage scope in marketing materials can mislead consumers, violating the New Jersey Consumer Fraud Act, which prohibits deceptive trade practices. Option D. Not correct. Insurers can choose not to renew policies provided they adhere to state regulations regarding notice and reasons for non-renewal. Relevant law. The New Jersey Consumer Fraud Act emphasizes honest representation of products and prohibits misleading or deceptive practices. Question 2. Scenario-based policy structure and components. Sarah, an IT manager for a mid-sized business in New Jersey, purchases a cyber insurance policy. 6 months later, a breach occurs due to an unpatched vulnerability in their software. The insurer denies the claim, citing an exclusion for failure to maintain reasonable security measures. What should Sarah verify to dispute this denial? Whether the vulnerability in question was disclosed to the insurer during underwriting. B. Whether the insurer provided Sarah's company with cybersecurity guidance post-policy issuance. C. Whether the policy defines reasonable security measures and if her company complied. D. Whether the breach occurred within the policy's retroactive date coverage period. Answer. C. Explanation. Option A. Not correct. While transparency during underwriting is important, this issue revolves around compliance with policy terms. Option B. Not correct. Insurers are not obligated to provide cybersecurity guidance, so this does not impact coverage validity. Option C. Correct. Insurers often include vague terms like reasonable security measures. If Sarah's company complied with industry standards or defined measures, the denial could be disputed. Option D. Not correct. Retroactive date issues are separate from exclusions related to policyholder conduct. Relevant guideline. Insurers must define ambiguous terms in policy documents. Courts often interpret unclear policy language in favor of the insured. Question 3. Risk assessment and management. Which of the following best describes a critical step in assessing an organization's cybersecurity risk for underwriting a cyber insurance policy? Evaluating the organization's historical data breach incidents and loss ratios. B. Auditing the organization's use of firewalls and antivirus software only. C. Conducting a comprehensive risk analysis, including third-party vendor risks. D. Using actuarial data to estimate potential future cyber claims without site-specific evaluation. Answer. C. Explanation. Option A. Not correct. Historical data alone does not account for current vulnerabilities or preventive measures. Option B. Not correct. While firewalls and antivirus software are critical, focusing only on these overlooks broader risks like phishing and vendor vulnerabilities. Option C. Correct. Comprehensive risk analysis encompasses evaluating technical safeguards, vendor management, and human factors, ensuring a holistic assessment. Option D. Not correct. Actuarial data is a valuable tool but insufficient for evaluating individual organizational risks without contextual analysis. Relevant standard. The National Institute of Standards and Technology (NIST) framework encourages a comprehensive approach to risk assessment, including third-party risks and organizational culture. Question 4. Policy underwriting and pricing. When underwriting a cyber insurance policy, which of the following factors is most likely to impact the pricing model for a business with high exposure to cyber threats? A. The organization's geographic location and the associated cyber threat landscape in that region. B. The level of cybersecurity awareness among employees, including training programs. C. The business's financial history, specifically its credit score. D. The number of cyber insurance policies the organization has purchased in the past. Answer. B. Explanation. Option A. not correct. While geographic location may influence the likelihood of certain threats, it is not as critical as the internal cybersecurity measures of the business. Option B, correct. The level of cybersecurity awareness and employee training directly impacts the business's exposure to risks like phishing and social engineering, influencing underwriting decisions. Option C, not correct. Credit scores are generally more relevant for traditional insurance, not cyber insurance, where security posture is a more significant factor. Option D, not correct. The number of policies purchased does not affect pricing unless it directly correlates with the risk exposure and claims history. A relevant guideline. Insurers assess risk based on an organization's proactive security measures and training programs, as poor employee awareness increases exposure to cyber threats. Question 5. First-party coverages. A New Jersey-based company suffers a ransomware attack and the hackers demand a payment in exchange for unlocking its critical systems. The company pays the ransom to restore its operations. Which of the following coverage provisions is most likely to reimburse the company for the ransom payment? A. Business interruption coverage. B. Cyber extortion coverage. C. Crisis management coverage. D. Data breach liability coverage. Answer B. Explanation. Option A, not correct. Business interruption coverage reimburses loss of income due to the attack, not the ransom payment itself. Option B, correct. Cyber extortion coverage is specifically designed to cover ransom payments as it provides protection against the costs associated with extortion attempts. Option C, not correct. Crisis management coverage typically covers the cost of public relations efforts in communication in the aftermath of the breach, not ransom payments. Option D, not correct. Data breach liability coverage addresses legal and regulatory liabilities related to the breach, not the ransom payment. Relevant policy provision. Cyber extortion coverage is a critical part of first-party coverage in cyber insurance policies, specifically targeting situations like ransomware attacks. Question 6. Risk mitigation strategies. Which of the following is the most effective risk mitigation strategy for reducing the likelihood of a successful cyber attack on an organization? A. Implementing multi-factor authentication (MFA) across all company systems. B. Ensuring employees regularly change their passwords every 30 days. C. Using a third-party cybersecurity firm to monitor the organization's network 24/7. D. Providing employees with financial incentives for reporting phishing attempts. Answer A. Explanation. Option A, correct. Multi-factor authentication (MFA) is one of the most effective ways to prevent unauthorized access, significantly reducing the likelihood of a successful cyber attack. Option B, not correct. While password management is essential, the requirement to change passwords frequently without additional protective measures like MFA can be less effective. Option C, not correct. While network monitoring is critical, it is reactive rather than preventative. MFA is a proactive measure that prevents unauthorized access from the outset. Option D, not correct. While incentivizing employees is a good practice, it does not directly address securing systems against cyber attacks like MFA does. A relevant cybersecurity best practice. The National Cybersecurity Institute, NEI, and other security frameworks advocate for MFA as a primary method of preventing unauthorized access to critical systems. Question 7. Emerging trends in cyber insurance. Which of the following is a significant emerging trend in the cyber insurance market that insurers are increasingly considering when pricing policies? A. The increased reliance on cloud-based services for business operations. B. The higher frequency of data breach events, particularly in the healthcare sector. C. The integration of artificial intelligence, AI, and machine learning (ML) into threat detection systems. D. The growing emphasis on social media risk management as a cyber threat. Answer C. Explanation. Option A, not correct. While cloud reliance introduces certain risks, the focus on AI and ML integration in threat detection systems is a more significant trend in cyber insurance pricing. Option B, not correct. The frequency of breaches in healthcare is a concern, but is not the primary trend insurers are focusing on for policy pricing. Option C, correct. The use of artificial intelligence, AI, and machine learning (ML) is growing as a tool for improving cybersecurity defenses. Insurers increasingly consider the adoption of these technologies when pricing policies because they can significantly reduce the risk of a breach. Option D, not correct. Social media risk is a concern, but it is not as critical a trend as AIM adoption in cybersecurity practices. Relevant trend. The increasing use of AI and ML in threat detection and response is a key driver for insurers, as these technologies improve an organization's ability to prevent or mitigate cyber threats. Question 8. Claims handling and incident response. In the event of a cyber claim related to a data breach, what is the first step the insured should take to ensure compliance with their cyber insurance policy's incident response requirements? A. Notify the insurer as soon as possible, even before investigating the breach. B. Begin working with a forensic firm to investigate the breach without informing the insurer. C. Contact law enforcement and immediately make a public statement. D. Assume that the insurer will take control of the situation and wait for their instructions. Answer A. Explanation. Option A. Correct. Most cyber insurance policies require prompt notification of the insurer to begin the claims process and activate coverage provisions even before the breach is fully investigated. Option B. Not correct. While working with a forensic firm is often necessary, the insurer should be notified first to ensure proper handling and coordination of the claim. Option C. Not correct. While law enforcement should be contacted, making a public statement before coordinating with the insurer may violate the terms of the policy, especially concerning crisis management. Option D. Not correct. The insured should not assume the insurer will take control immediately. The insured has a duty to notify the insurer promptly and may need to cooperate in the investigation. Relevant claims procedure. Cyber insurance policies typically require timely notification, which is essential for initiating coverage, including legal and forensic support. Question 9. Third-party coverages. A vendor that provides cloud storage services to a New Jersey-based e-commerce company suffers a data breach exposing the e-commerce company's customer data. The commerce company wants to know if its cyber insurance policy will cover the resulting legal claims and regulatory fines. Which of the following coverages is most relevant for this situation? A. Vendor risk management coverage. B. Third-party data breach liability coverage. C. Cyber extortion coverage. D. First-party business interruption coverage. Answer B. Explanation. Option A. Not correct. Vendor risk management coverage generally applies to managing risks when selecting vendors, not directly covering claims after a breach. Option B. Correct. Third-party data breach liability coverage addresses legal costs and fines associated with breaches involving third parties, making it relevant in this case. Option C. Not correct. Cyber extortion coverage would apply if there was a ransom demand, not if a vendor breach occurred. Option D. Not correct. Business interruption coverage addresses losses from operational disruptions, not third-party liability claims. Relevant coverage. Third-party data breach liability coverage is designed to cover the financial and legal consequences of the third-party data breach that impacts the insured. Question 10. Cyber risks and threat landscape. Which of the following is considered the most prevalent form of cyber attack affecting small businesses in New Jersey? A. Distributed denial of service, DDoS, attacks aimed at overwhelming networks. B. Ransomware attacks demanding payments for unlocking encrypted data. C. Phishing attacks targeting employees for login credentials and personal information. D. Man-in-the-middle attacks that intercept communications between users and websites. Answer C. Explanation. Option A. Not correct. While DDoS attacks are impactful, they tend to target larger organizations, not small businesses, which are more susceptible to other types of threats. Option B. Not correct. Ransomware attacks are significant, but phishing attacks are more common for smaller businesses as they rely on social engineering to compromise systems. Option C. Correct. Phishing attacks remain the most prevalent type of cyber attack against small businesses as they exploit human vulnerabilities to steal credentials or data. Option D. Not correct. Man-in-the-middle attacks are less common in small businesses due to the use of secure communications protocols. Relevant trend. Small businesses are prime targets for phishing due to weaker cybersecurity defenses and a lack of employee training on identifying fraudulent attempts. Question 11. Cyber insurance and regulatory compliance. Which of the following regulations is most likely to impact a company's cyber insurance policy if the company operates in the healthcare sector and suffers a data breach? A. The Health Insurance Portability and Accountability Act, HIPAA. B. The General Data Protection Regulation, EDR. C. The California Consumer Privacy Act, COPA. D. The National Institute of Standards and Technology, NIST Cybersecurity Framework. Answer A. Explanation. Option A. Correct. HIPAA specifically applies to the healthcare sector, and data breaches involving protected health information (FI) must comply with HIPAA's breach notification rules and penalties. Option B, not correct. The GDPR applies to organizations that handle personal data of EU citizens but is not specific to the healthcare sector. Option C, not correct. The CCPA applies to businesses in California but is not healthcare specific. Option D, not correct. The NIST cybersecurity framework provides guidance but is not a regulatory requirement like HIPAA. Relevant law. HIPAA governs the protection and confidential handling of health information, which impacts cyber insurance policies covering healthcare organizations. Question 12. Cybersecurity risks and data breaches. An organization suffers a breach where hackers accessed customer data, including credit card details. The organization offers to provide affected customers with free credit monitoring services. Which of the following cyber insurance coverages would typically cover the cost of this service? A. Business interruption coverage. B. Data breach response coverage. C. Cyber extortion coverage. D. Network security liability coverage. Answer B. Explanation. Option A, not correct. Business interruption coverage compensates for lost income during downtime but does not cover credit monitoring services. Option B, correct. Data breach response coverage typically includes costs related to notifying customers and offering credit monitoring services in the wake of a data breach. Option C, not correct. Cyber extortion coverage applies to ransom payments, not credit monitoring services. Option D, not correct. Network security liability coverage addresses third-party claims arising from a data breach but does not cover the cost of credit monitoring for affected customers. Relevant coverage. Data breach response coverage is a first-party coverage aimed at mitigating the cost of responding to and managing the fallout of a data breach. Question 13. Cyber insurance risk assessment. Which of the following factors is most important when assessing a company's cyber insurance premium? A. The company's industry and the data sensitivity it handles. B. The number of employees working remotely. C. The company's total revenue for the past year. D. The age of the company's website. Answer A. Explanation. Option A. Correct. The industry and the sensitivity of the data a company handles are critical factors. For example, companies in healthcare or finance that handle highly sensitive data may face higher premiums. Option B, not correct. While remote work increases risk, it's not as directly impactful on premium calculation as the nature of the data handled. Option C, not correct. Revenue is not as important as data sensitivity when pricing cyber insurance. Option D, not correct. The age of the website is less relevant than the type of data it processes. Relevant underwriting factor. Insurers prioritize industries that deal with sensitive data as they are more likely to experience significant breaches, thus impacting premium pricing. Question 14. Policy exclusions. The cyber insurance policy excludes coverage for losses resulting from employee negligence, such as the accidental sharing of sensitive data with unauthorized individuals. Which of the following best describes this exclusion? A. Moral hazard. B. Vicarious liability. C. Social engineering fraud. D. Negligence exclusion. Answer D. Explanation. Option A. Not correct. Moral hazard refers to the idea that individuals or organizations may take more risks because they don't bear the full cost of those risks. Option B. Not correct. Vicarious liability refers to holding an organization responsible for the actions of its employees, but this is not the issue here. Option C. Not correct. Social engineering fraud typically involves impersonation to manipulate employees into disclosing sensitive information but doesn't directly relate to negligence. Option D, correct. The negligence exclusion specifically excludes coverage for losses arising from the failure of employees to adhere to proper security practices. Relevant exclusion. Many cyber policies exclude losses from employee negligence, which is often considered part of standard operational risks. Question 15. Business continuity and cyber insurance. Which of the following types of coverage in a cyber insurance policy helps an organization recover lost income after a cyber attack disrupts its business operations? A. First-party coverage. B. Business interruption coverage. C. Data breach liability coverage. D. Cybercrime coverage. Answer B. Explanation. Option A. Not correct. First-party coverage includes different types of coverage like data breach response, but not necessarily business interruption. Option B, correct. Business interruption coverage compensates for income lost during system downtime due to a cyber event. Option C, not correct. Data breach liability coverage typically covers third-party claims resulting from data breaches, not income loss. Option D, not correct. Cybercrime coverage covers losses due to criminal activities such as fraud or theft, but not income loss from business disruption. Relevant coverage. Business interruption coverage is a vital part of cyber insurance, helping organizations recover financially when operations are halted due to a cyber incident. Question 16. Subrogation in cyber insurance. In the event that a third-party vendor causes a data breach affecting an insured organization, which of the following could the insurer potentially do under the principle of subrogation? A. File a lawsuit against the third-party vendor to recover damages. B. Pay the damages to the insured party without any recourse. C. Charge the insured additional premiums for future breaches. D. Cancel the insured's policy due to the vendor's actions. Answer A. Explanation. Option A, correct. Subrogation allows the insurer to step into the shoes of the insured and recover the losses from a third party responsible for the breach. Option B, not correct. The insurer would typically seek to recover the costs from the responsible third party rather than just paying out without recourse. Option C, not correct. The insurer's payment is based on the policy's terms, not on charging additional premiums due to vendor negligence. Option D, not correct. Subrogation does not typically result in policy cancellation but in efforts to recover the costs from the responsible third party. Relevant concept. Subrogation allows insurers to recover costs from liable third parties after compensating the insured for their losses, which helps maintain premium stability. Question 17. Social engineering and cyber fraud. A business owner falls victim to a cyber fraud scheme where a hacker impersonates a senior executive and tricks an employee into transferring funds. Which type of cyber insurance coverage would typically cover the financial loss? In this case, A. Cybercrime coverage. B. Data breach liability coverage. C. Business interruption coverage. D. Network security liability coverage. Answer A. Explanation. Option A. Correct. Cybercrime coverage typically covers losses from fraud or criminal activities, including social engineering schemes like the one described. Option B. Not correct. Data breach liability coverage addresses data exposure or theft, not financial fraud. Option C, not correct. Business interruption coverage addresses income loss from operational disruptions, not fraud. Option D, not correct. Network security liability coverage applies to breaches involving unauthorized access or data loss, not fraud. Relevant coverage. Cybercrime coverage specifically addresses financial losses due to fraud, including social engineering scams where an attacker tricks employees into transferring funds. Question 18. Third-party claims and legal fees. A third-party client sues a business for failing to protect their personal data in a cyber attack. Which of the following coverages would most likely cover the business's legal defense costs and damages? A. Cyber extortion coverage. B. Network security liability coverage. C. Business interruption coverage. D. First-party data protection coverage. Answer B. Explanation. Option A. Not correct. Cyber extortion coverage typically applies to ransom-related incidents, not lawsuits from third parties. Option B, correct. Network security liability coverage addresses third-party claims resulting from data breaches or inadequate security, including legal defense costs and damages. Option C, not correct. Business interruption coverage compensates for income loss, not legal claims. Option D, not correct. First-party data protection coverage covers direct losses to the insured, not third-party claims. Relevant coverage. Network security liability coverages. A crucial element of third-party coverage in cyber insurance policies, addressing legal costs related to data breaches. Question 19. Risk assessment and premium pricing. A company operates in a high-risk industry for cyber threats and implements a comprehensive cybersecurity program, including regular vulnerability testing and employee training. Which of the following would most likely result from this proactive approach? A. The company will pay higher premiums due to increased perceived risk. B. The company will be eligible for discounts or lower premiums due to risk mitigation efforts. C. The company's cyber insurance policy will exclude certain coverage areas. D. The company will be required to purchase additional coverage for their cybersecurity measures. Answer B. Explanation. Option A. Not correct. Proactive risk mitigation generally lowers the risk for insurers, reducing premiums. Option B, correct. A company that takes proactive cybersecurity steps can qualify for discounts or lower premiums as it reduces the likelihood of a claim. Option C, not correct. Risk mitigation should lead to broader coverage, not exclusions. Option D, not correct. Proactive measures typically reduce the need for additional coverage. Relevant trend. Insurers reward businesses that demonstrate proactive risk management by offering premium discounts as their efforts lower the probability of claims. Question 20. Coverage for emerging threats. Which emerging cyber threat is most likely to prompt insurers to revise cyber insurance policies and coverage limits in the coming years? A. The rise in phishing and spear phishing attacks targeting executives. B. The proliferation of Internet of Things devices increasing attack surfaces. C. The use of artificial intelligence by hackers to automate attacks. D. The increasing number of data breaches involving legacy systems. Answer B. Explanation. Option A. Not correct. Phishing attacks have been around for some time, but the threat posed by devices is more recent and growing. Option B. Correct. The proliferation of devices increases the attack surface, which may lead insurers to adjust coverage limits to account for these emerging risks. Option C. Not correct. AI-driven attacks are a concern, but they are already considered part of the evolving threat landscape. Option D. Not correct. While legacy systems are still a risk, the explosion of devices is a newer and growing concern for insurers. Relevant trend. The ecosystem's rapid expansion is a significant factor driving insurers to reassess cyber insurance policies to accommodate the increased risk of connected devices. Question 21. Ransomware coverage. A business is hit by a ransomware attack that locks their critical systems. The attacker demands payment to release the encrypted data, and the business decides to pay the ransom. Which of the following would most likely cover the ransom payment in a cyber insurance policy? A. Cybercrime coverage. B. Business interruption coverage. C. Network security liability coverage. D. Cyber extortion coverage. Answer D. Explanation. Option A. Not correct. Cybercrime coverage is generally aimed at fraud and theft, not specifically for ransomware-related payments. Option B. Not correct. Business interruption coverage compensates for income lost during downtime, but not ransom payments. Option C. Not correct. Network security liability coverage focuses on liability for third-party damages due to breaches, not ransom payments. Option D. Correct. Cyber extortion coverage specifically covers ransom payments and other related costs in cases of cyber extortion or ransomware attacks. Relevant coverage. Cyber extortion coverage is critical in situations where an organization is faced with ransom demands, providing financial protection against these specific types of cyber attacks. Question 22. Social engineering fraud. A company employee receives an email that appears to come from the CEO requesting a transfer of funds to an overseas account for an urgent project. The employee follows the instructions, but the request was fraudulent. Which of the following cyber insurance coverages would most likely cover the loss? A. Cybercrime coverage. B. Network security liability coverage. C. Data breach liability coverage. D. Business interruption coverage. Answer A. Explanation. Option A. Correct. Cybercrime coverage typically includes protection against social engineering scams, including fraudulent email requests that result in financial loss. Option B. Not correct. Network security liability coverage applies to damages from security failures or breaches, not financial losses from fraud. Option C. Not correct. Data breach liability coverage covers third-party claims related to breaches but does not address fraud. Option D. Not correct. Business interruption coverage compensates for lost income due to downtime but does not cover losses from fraud. Relevant coverage. Cybercrime coverage specifically protects against losses from fraud, including social engineering attacks where an attacker impersonates an authority figure. Question 23. Privacy laws and cyber insurance. A company suffers a data breach in which personal information of European Union citizens is exposed. Which privacy regulation is most likely to affect the company's cyber insurance policy due to this breach? A. The Health Insurance Portability and Accountability Act, HIPAA. B. The California Consumer Privacy Act, COPA. C. The General Data Protection Regulation, EDPR. D. The Payment Card Industry Data Security Standard, ECESS. Answer C. Explanation. Option A. Not correct. HIPAA applies to the healthcare sector in the US, not to breaches involving European Union citizens' data. Option B. Not correct. The CCPA applies to California residents' data, not European Union citizens' data. Option C, correct. The GDPR is a regulation in the EU that imposes strict rules regarding the processing and protection of personal data of EU citizens. A breach involving EU citizens' data would trigger GDPR compliance issues which could influence the company's cyber insurance policy. Option D, not correct. PCI DSS is relevant for payment card data but does not apply to personal data of European Union citizens. Relevant law. The GDPR significantly affects organizations handling personal data of EU residents, impacting both liability and coverage options in cyber insurance policies. Question 24. Cyber insurance premium calculation. A company is seeking to lower its cyber insurance premiums. Which of the following actions is most likely to lead to a reduction in premiums? A. Increasing the number of employees with administrative access to sensitive systems. B. Implementing multi-factor authentication (MFA) for accessing company systems. C. Reducing investments in employee training and awareness programs. D. Relying solely on external vendors for cybersecurity solutions. Answer. B. Explanation. Option A. Not correct. Increasing the number of employees with administrative access increases the risk of internal breaches, leading to higher premiums. Option B, correct. Implementing multi-factor authentication (MFA) reduces the risk of unauthorized access and is a proactive security measure that insurers typically reward with lower premiums. Option C, not correct. Reducing investments in training and awareness programs increases the likelihood of human error, which could result in higher premiums. Option D, not correct. Relying solely on external vendors for cybersecurity can expose the company to risks related to vendor vulnerabilities, potentially raising premiums. Relevant risk mitigation. Insurers generally reward companies that implement robust security measures such as MFA, which reduce the likelihood of successful cyber attacks. Question 25. Data breach and notification costs. A company experiences a data breach where sensitive customer information is compromised. The company is required to notify all affected customers, offer credit monitoring services, and cover other breach-related costs. Which of the following would most likely cover these costs under a cyber insurance policy? A. Data breach response coverage. B. Business interruption coverage. C. Network security liability coverage. D. Cybercrime coverage. Answer A. Explanation. Option A. Correct. Data breach response coverage includes costs associated with notifying affected individuals, providing credit monitoring services, and other actions required after a breach. Option B, not correct. Business interruption coverage compensates for income loss due to system downtime, not for breach response costs. Option C, not correct. Network security liability coverage applies to third-party claims related to data breaches, but not directly to breach response costs. Option D, not correct. Cybercrime coverage addresses losses from cybercrime but not breach-related response efforts. Relevant coverage. Data breach response coverage is designed to help organizations mitigate the costs incurred when handling the fallout from a data breach. Question 26. Third-party vendor risks. A company outsources its IT operations to a third-party vendor and the vendor experiences a cyber attack that impacts the company's operations. Which of the following is likely to be included in a cyber insurance policy to cover this scenario? A. First-party coverage. B. Network security liability coverage. C. Vendor risk management coverage. D. Ransomware recovery coverage. Answer C. Explanation. Option A. Not correct. First-party coverage typically addresses direct losses to the insured company but not to third-party vendor risks. Option B. Not correct. Network security liability coverage applies to third-party claims resulting from a company's breach, not a vendor's breach. Option C, correct. Vendor risk management coverage addresses risks arising from third-party vendors, including cyber attacks that impact the company's operations. Option D, not correct. Ransomware recovery coverage is specific to ransomware attacks and would not apply to a third-party vendor's breach. Relevant coverage. Vendor risk management coverage protects against risks from outsourcing critical services to third-party vendors, which is increasingly a focus in cyber insurance. Question 27. Cyber insurance and physical damage. Which of the following is most likely to be covered by a cyber insurance policy if a cyber attack results in physical damage to a company's hardware? A. Data loss recovery coverage. B. Business interruption coverage. C. Network security liability coverage. D. Property damage coverage. Answer D. Explanation. Option A. Not correct. Data loss recovery coverage focuses on recovering lost or corrupted data, not physical hardware damage. Option B, not correct. Business interruption coverage compensates for income loss during downtime but doesn't cover physical damage. Option C, not correct. Network security liability coverage addresses third-party claims from data breaches, not physical damage to hardware. Option D, correct. Property damage coverage in a cyber insurance policy would cover physical damage to hardware caused by a cyber attack. Relevant coverage. While cyber insurance typically focuses on data and business operations, some policies may include property damage coverage for hardware or physical assets damaged during a cyber attack. Question 28. Cyber insurance and regulatory fines. A company is fined by a government agency for failing to properly secure customer data following a cyber attack. Which of the following types of coverage is least likely to cover the fine? A. Data breach liability coverage. B. Network security liability coverage. C. Regulatory fines coverage. D. Cyber extortion coverage. Answer D. Explanation. Option A. Not correct. Data breach liability coverage typically includes legal and regulatory costs following a data breach, including fines. Option B. Not correct. Network security liability coverage may cover legal and regulatory fines arising from data security failures. Option C, not correct. Regulatory fines coverage is specifically designed to cover fines resulting from non-compliance with data protection laws. Option D, correct. Cyber extortion coverage addresses ransom payments, not fines or penalties imposed by regulatory bodies. Relevant coverage. Regulatory fines coverage is a specialized feature that protects against fines resulting from non-compliance with regulations related to data protection. Question 29. Cyber insurance for small businesses. A small business purchases cyber insurance for the first time. Which of the following would likely be the most important factor for the insurer when assessing the business's risk? A. The number of employees and the quality of cybersecurity training. B. The company's total revenue and profit margins. C. The company's social media presence and brand recognition. D. The geographic location of the business. Answer A. Explanation. Option A. Correct. Insurers often assess the number of employees with access to sensitive data, the quality of training, and the overall cybersecurity posture when determining risk for a small business. Option B. Not correct. While revenue and profit are important, they are less relevant than cybersecurity practices in assessing cyber risk. Option C, not correct. The company's social media presence is not as directly related to cyber risk as employee training and cybersecurity measures. Option D, not correct. Geographic location might influence certain risks but is less important than the company's internal cybersecurity practices. Relevant risk factor. Small businesses are particularly vulnerable to cyber threats due to limited resources, so insurers focus on the company's internal cybersecurity policies and employee training to assess risk. Question 30. Cyber insurance and emerging threats. Which of the following emerging cyber threats is most likely to result in insurers revising cyber insurance policies to provide coverage? A. The rise of quantum computing threatening encryption. B. The increasing use of cloud storage services. C. The proliferation of data-driven marketing practices. D. The rise of nation-state cyber attacks targeting critical infrastructure. Answer A. Explanation. Option A, correct. Quantum computing is anticipated to pose a serious threat to the current encryption methods that secure digital data. As this technology progresses, insurers are likely to revise policies to cover the risks associated with quantum computing's potential ability to break traditional encryption systems. Option B, not correct. While cloud storage services have created additional cyber risks, most cyber insurance policies already account for these risks, and the primary concern is often the security protocols around cloud services. Option C, not correct. Data-driven marketing is a growing trend, but it is generally not viewed as a primary emerging threat compared to other more technical risks like quantum computing. Option D, not correct. Nation-state cyber attacks targeting critical infrastructure are a significant concern but are already considered within cyber insurance policies related to government infrastructure and high-value critical systems. Insurers are more likely to revise policies in response to the unique risks posed by quantum computing. Relevant threat. The advancement of quantum computing is set to disrupt existing encryption technologies, creating new challenges for data security and insurance companies. This will likely lead to revisions in policies to address these emerging risks.